Okay, what's all the talk about the Federal Reserve Board raising rates to fight inflation? How does raising the cost of money stop prices from rising? Well, briefly, inflation is the rate at which the value of your money is falling, and consequently the general level of prices for goods and services is rising. And currently, as you may have heard, and you're certainly feeling, the inflation rate is at a 40-year high, and the prices for almost everything is rising. Now, the Federal Reserve Board, or the Fed as it's commonly known, well, you see, they regulate the U.S. money and financial system, and earlier this month, they raised the short-term lending rates by 0.5%. It's still a very low 0.83%. And more importantly, they moved towards an attitude of economic tightening to slow the economy down. Now, the way this is supposed to work is by increasing these short-term lending rates. Commercial and consumer borrowing of money is reduced and spending goes down, which should shrink that high demand pressure for goods and services, which is what's currently pushing prices higher. But will it work? Can this approach alone stop inflation? Well, if this was a more normal time in our world, the likelihood would be yes. But unfortunately, there's about 3 other challenges that the Fed may not have much control over that definitely impact that inflation picture. Now, first of all, supply chain problems due to COVID protocols have not fully gone away. China is the #1 supplier of products and has the world's largest shipping port, the port of Shanghai. Now, they are just ending a 7-week COVID lockdown, and this has caused a massive shortage of goods to the United States and the rest of the world. Second, underlying inflation drivers like oil and gas prices, construction material prices, and housing costs like home sales and rents, they're all due to shortages in supply have been rising, which of course is adding to inflation pressures. And third, and although this might sound like good news, household total cash savings for the first time in 30 years has surpassed total household debt. U.S. households are now flush with cash, which means even though the Fed is raising rates to slow that economy, all that cash allows consumers the ability to offset increased borrowing costs by using their cash, keeping spending and demand up. They can bypass loans by using their cash. Our outlook indicates inflation will be with us for a while, and buyers should expect additional significant rate hikes this summer and into the fall. Now, you'll want to plan for rising interest rates. Well, how do you do it? Well, you want to lock in long-term debt and mortgages as soon as you can. Our lending partners are offering now multi-month lock and shop programs. And this is going to help you lock in an interest rate now while you continue to find a property so you can avoid that risk of higher rates while you're shopping. Now, the most inflation-resistant property types for purchasing would be multifamily homes where investor returns are going to rise as investors simply pass that inflation onto their tenants through higher rents. Now, single-family homes, they can also be a good hedge from inflation pressures as your monthly costs for housing are fixed once you're in that mortgage. Meanwhile, your wages will be rising as a result of inflation. And both types of properties will benefit from appreciation values due to continued limited supply, plus yearly tax and depreciation benefits. Now, it's only until we see a drastic reduction in demand and a drastic increase in supply will prices in housing level off and potentially lower. And we're not seeing that at this time, nor for the foreseeable future. Now, the residential real estate market in Massachusetts and most of the country is still in a very competitive bid environment with many more buyers than there are sellers. And yes, it is true that buyers who are on the fringes of qualifying with lower interest rates of last year are now priced out of the market. That is true. But most buyers, due to rising wages, strong household cash reserves, and that right long-term outlook, they're still aggressively pursuing housing. They're simply expanding their acceptable locations, they're being more open to property conditions, and they're increasing those down payments to offset rising mortgage interest rates. Now, as always, remember, real estate centers on a long-term strategy, and it's always the right time to buy the right property. I'm Ron Carpenito. If our 18 years of local market insight and relationships can help you with your real estate decisions, just give us a call today. We'd be glad to help.